The package delivery giant missed Wall Street's revenue estimates with about $22 billion, but had better than expected adjusted profit at $2.54 a share. Really, though, in terms of our takeaways, Brad Smith, we're focusing on a couple of different things here. So why don't you kick it off?
Yeah, one of them was international revenue, and we called this out this morning after the earnings dropped here, and potentially a larger headwind that could continue to persist right now from China. If you look through the earnings results from UPS, one of the things that they did talk about was that softness in the Asia market there. So that one of the hits on this most recent quarter and could potentially proceed into the next quarter as well when you consider about some of that weakness and how that shows up in their forecast. You were also keeping an eye on volumes, and before we get to that, the Teamster negotiation, which essentially concluded. I mean, it's still
basically they have to ratify.
Right, has to be ratified.
But it's largely been agreed to. It's just a matter of sort of now putting that final stamp of approval on that agreement. But it's not just the cost directly related to that. It's the fact that some of the clients of UPS put off their orders while they were waiting for these negotiations to conclude. Right. So in terms of that obviously is one of the things that is feeding into this lowered guidance that we talked about. I'm also looking here in the U.S. The company said that domestic revenue was down by nearly 7%. That was because of a 10% drop in average daily volume. At the same time, there was a 3.3% increase in revenue per piece. So even though we have seen the sort of broader conversation among companies, whether it's shippers like this or it's packaged consumer good companies, et cetera, we've seen the volume versus price narrative kind of cool off a little bit because we are seeing some disinflation here, but we're still sort of having that conversation when it comes to UPS. So it's kind of made up to some degree for that drop in volume with an increase in prices, but not all the way.
Yeah, and then one last segment here that really kind of caught the eye this morning was the supply chain solutions segment. This was a dismal quarter for supply chain solutions year over year. You look at some of the declines that came forward, particularly there on a revenue basis and then additionally on the operating profit basis, and a larger question of where they will continue to find some type of demand that is propped up or at least sustained even in a more normalized environment for the supply chain solutions part of their business. Operating profit came in at about $295 million. Compare that to the $513 million that they saw in the same quarter last year. So a significant cut there led some of the overall year-over-year declines on a segment basis for the company.